All right, I got 6 o'clock. We'll call the insurance committee meeting to order. I believe we do have a quorum. We've got 6 and 11 on the committee, so we should have a quorum. Call roll. Bubba Grigger here. Landon Gully. Yeah. Mary Ann Baker. She emailed me. She's out of town. She won't make it. Shane Burton. Yeah. Richard Harsh. Here. Dwight Jewell. Here. Rachel Jones, she texts, she won't make it tonight either. Lonnie Taylor, Ray Russell, I think he may be out of town. Bill Scruggs, and Vicki Howard. All righty. The next on our agenda, approve the minutes from the November 5th, 2020 meetings. This committee don't meet too much, so if you would look it over and see if it's any additions, corrections that needs to be made to the minutes. If not, I entertain a motion to approve. Got a motion by Mr. Harris and second by Mr. Gully to approve the minutes from the November 5th, 2020 meeting. The next, number 4, officer elections. We need to elect a secretary. Since Linda Johnson, she was our secretary, and then she's no longer on the commission. Mr. Harsh. I think she would. I mean, I think she would do it. I got a motion by Mr. Harsh, second by Burton to elect Mary Ann Baker secretary. All in favor say aye. Aye. All opposed. So where she'll get the. She might get us for that. All right, number 5 is insurance broker presentations. The mayor, do you want to introduce and?
Yeah, I'll just say the reason for this is, I think I've sent it to all the committee members and commission members, that when we had our compensation study, they did a benefits review and found that we're maybe a little bit behind on our health insurance coverage. And speaking to various individuals, and including Wesley Robertson from CTAS, I told them my idea of issuing a request for qualifications for broker services. They all thought that was a good idea. Each of these entities you see listed on your agenda has contacted us in the past about being interested in doing business with the county, so I invited them all here tonight. I don't think there's a representative from 5 Points here, though they did say if we issued a request for qualifications, they would be interested in submitting their qualifications. But just going down the list, I see the Sequoia Group representatives here. They do have a representative, so I will turn it over to Mr. Hilton if he wants to go ahead and give a presentation. I just ask when he comes up to the microphone, there's a little button right down here in the middle. If you push that, turn on your microphone.
Okay, thank you, Mayor. Vicki, you want to hand these out? Thank you very much. I'm Tim Helton with Sequoia Group, and we'll run through this presentation real quick. It's not as long as it seems, and I won't take up too much of your time. If you should have questions, just stop me and I'll be more than happy to answer them. Okay, so if you'll turn to the first page there. Sequoia Group has had the endorsement of the Association of County Mayors since 2005. That's how we've been able to get to know the mayor and CTAS and everybody there. So Sequoia Group's partnership goals and everything is to proactively partner with the county to assess its health plans and all of its benefits, improve providing short steps to long-term cost containments. We all know that we have to protect the penny for the county, but we also have to protect the paycheck for the employees. So that's been a long-standing goal of ours, of us doing business with county governments across the state. Provide innovative solutions, ideas, and communication strategies relating to the benefits and compensation packages. Assist the counties in all areas of communication, administration, and compliance related to their benefits. Provide analytics regarding plan performance to determine plan design changes and best funding options. We'll always let the analytics and the data within your group and your demographics dictate what plans we may offer to your employees. Aggressively market all lines of coverage in order to provide best-in-class benefits at the most cost-effective price. As we all know, employees, come to work at county government not because of the salary, but it's because of those benefits have always been very, very good. So what we have to maintain here is to make sure that we're able to recruit, hire, train, and retain a better quality of individual. And so the benefits are paramount in us being able to obtain that as a county. Be a liaison and advocate for the employees and the counties to the carriers and vendors. All the employees that we represent across the state, from the west side of the state all the way to the east side of the state, every one of them has our cell numbers, because the benefits that we provide to your employees is a life and death type product. And sometimes things happen late at night or on a weekend, and they need to get in touch with somebody, so they've got us as an advocate there. If you look at that next piece there, county government's unique partnership. Well, if we look at Trousdale, you don't have a lot of resources of the bigger counties and everything. So we've got to be able to make sure that we as Sequoia Group, we can be all things you need us to be in the relationship that you would hire us for. So one of the things, so these next things that we do here, these are all included of us being your broker. With the invoice reconciliation and cleanup and streamlining after enrollment, and then ongoing during each and every month. There's no outside enrollers or firms that come in. Your employees are going to sit down with a staff employee from Sequoia Group year in and year out. So, the first year that we come in, we're nothing more than an insurance salesman. But as time goes on, we become just a family friend. And so we really like to be able to have that one-on-one relationship with your employees. 24/7 employee advocacy service. Again, like I said, 24 hours a day, 365 days a year. Also on our benefits, we'll take all the benefits or all the policies and procedures you have in place in regards to your paid time off and sick leave. We will design those benefits to coordinate with those PTO and sick leave times. Benefits administration portal for your administrative staff, along with your employees. Everything that we would give them in paper, it's in a portal that's there in electronic. Whether it may be on the county's communication, your employee handbook, or any of the compliance materials that you would want them to have, it would be there in that employee portal. We also do the ACA tracking and reporting at no cost. We do that on a monthly basis, and then also file it with the federal government for you at the end of the year. Also, you all are on the state plan. We market and educate of the state medical plans, including in our guides, and you'll see this here in a minute. We gave you an example. We'll include in the guide, in the presentation, and also in the portal. When we come in at open enrollment, if you all are still on the state plan, we will help your employees understand which plan they should go into over on Edison. We will not enroll or touch anything in Edison, but we would help them select, if need be, the plan that they needed to be in, okay? We also do Medicare education for employees and all their families. Training for department heads and elected officials on any of the HR compliance that the elected officials or department heads would need to be trained on, whether it be FMLA, leave, HIPAA, ADA, whatever the case may be. Open enrollment meetings, we understand that highway departments come in somewhere around 6:30, 7 o'clock. If we need to meet them at 6 a.m., 6:30, we'll have that enrollment at that time. The same way on your sheriff's department, if they're changing shifts at 7 or so, then we'll be there to be able to handle that enrollment also. All the HR and administrative support and forms, we have certified HR professionals on our staff. It's not outsourced, it's sitting right there in Knoxville. So Vicki would be able to have at a call with just a phone call, a certified human resource for any compliance issues or questions that she may have. Also, we'll make sure that you're compliant in your Title VI so that you make sure that you're going to be getting your grant money. This next one here, I was talking to the mayor and Vicky, and this county here kind of reminds me of you all. Okay, this is a little small county back east. They are off the state plan. We earned this relationship back in 2009. They only provide, in 2009, they only provided $200 a month towards the employee's total medical premium. $200. Today, they only contribute $250 a month to the employee's medical plan. So if you look down there in 2009, they only had one family enrolled in less than 40% participation, and no carriers would quote the group. We got the relationship a week and a half before the effective date. And if you look at the numbers here, because of our negotiating power and because of our education and getting younger families on the plan, if you look now, when we enrolled just this past August, there was 30 employees with +1 and 14 families on the plan. So we increased the participation in dependent coverage by 68%. But if you look at those numbers there, where the renewal came in at, and then what the final renewal was, those are a tremendous amount of dollars. So if you look at it there, through the years since we've had this relationship, we saved this little small county $883,880. So what I asked the mayor today was, how much does the penny equal to in Trousdale County? So that's a lot of money there. I think it's right, $26,000, and it was like $6,000, a little less than $6,000 over on the urban side. Was that right, Mayor?
Yes, sir. It's in that ballpark. Yes, sir.
Okay. Any questions on that right there? So what we would do there in regard, well, I think it's on in the presentation. I'll go through there. Our service approach, there's about 6 things there. We're going to do the reporting and analytics. So on if we're able to get the claims data for you all, let's say that you all come off the state plan and you all wanted to know how you were running, we would provide you all that financial dashboard and those analytics on a monthly basis. So on a monthly basis, you're going to know if your renewal was this month, this is exactly what the renewal would be. So we're going to use all of the reporting and analytics to keep our finger on the pulse to make sure that we're running in a positive manner. If we need to go in and put in wellness programs management, we can do that. We'll do all the compliance for you. Again, that's a value add service, no invoice to you. So do seminars, compliance manuals, and publications. If you have to do any continuing education for CTAS or MTAS, we're able to provide that so you can get your certificates to pass along to them for your elected officials. All the communication will come through us, either hard copy or in the SGI Connect, the portal. Human resources, whatever Vicky and the mayor and in that department needed there from an HR standpoint, because I know that we're needing some HR services there. We've built HR departments across the state for some small counties. We can do it here for Trousdale County also. We also we transition and help transition employees off the group plan or transitioning them from the group plan or onto Medicare. So we'll do all that educational training for the Medicare eligible folks. The analytics and plan management, I'll show you a little more detailed report on that there. So we'll skip through that. If we were to go, say in 2, 3, 4 years, we came out of state plan and we wanted to do population health and really, say you went self-funded and you wanted to be in control of some dollars over on your pharmacy benefit management or with your doctors, you want to have your own walk-in clinic and stuff like that, then we can help design that population health management there. We've done that with Vanderbilt Health across the state. Market process and vendor management. We're an independent broker. We don't sell for one carrier. So what we'll do, we'll always go out, market fully insured, self-medical to include all network discounts, savings, and disruption analysis. Self-funding marketing to include stop-loss contracts and deductible analysis. Market ancillary and voluntary coverages. What we'll do there is we'll send the RFP out to all the carriers. There'll be about 15 to 20 of them. We'll analyze all of that, and we'll bring back the top 3 to 4 vendors with benefits and costs to the committee here to select what product we're going to offer to the employees. Savings on average, usually against a lot of the carriers that we replace, is roughly around 30%. We're committed to marketing to all vendors and carriers. Like I said, we're not tied to one carrier. So also standard procedure for state comptroller's office, county audits. We've been doing it so long, when the comptroller comes in to do the audit, their file is sitting right there that they can look at to just sign off on. Review and negotiate packaging lines of businesses with the same carriers for discount. Performance guarantees, we get those in writing. All proposals reviewed and discussed with the client to include pros and cons of each. Assess potential vendors, carriers based on the culture and the needs of the client. It's real simple. Big difference from, I was talking to gentleman a few moments ago. He's from Columbia. There's a big difference between Columbia, Tennessee and Hartsville. So we may need to make sure that the programs and products that we bring to our employees at Hartsville, Trousdale needs to be unique to them. And that's how we'll do that. So we'll also do the ongoing claims resolution and vendor carrier contract management. We'll do all that. Basically what we do, if you hire us as your broker of service, then we're going to turn around and just act like we've built an HR benefits department sitting right down the hall from the mayor and Vicky. The next page, compliance and HR support. I won't get into all the details of all the acronyms there, but it's all the things that want to keep you compliant and keep you out of a court of law from an employee standpoint. We do all the ACA guidance and legislative updates. We'll do the webcasts. We'll do the ACA reporting. We'll do the ACA reporting, again, at no charge. Take that off of Vicky's hands if she wants to relinquish that. And so we'll do that. Employer guides and tools. We realize that some people like to use a computer and there's some people that don't. So we'll provide those materials in hard copy and then also electronic. Open enrollment communication and support. Strategy specific to the culture of the client, like I said earlier. Excuse me. Develop announcements, materials, and educational media. We do our videos, our PowerPoint presentations, Zoom calls, call center, one-on-one, ever how you have to do it. Last year, we had a 1,800 employee group that 2 months before open enrollment, they said they wanted to go to virtual because of COVID. We enrolled that whole group totally virtual. We're doing it again this year. So it was totally electronic. And you got to remember, some of those folks are bus drivers and janitors, and they don't use a computer, and we were able to take care of them. So we feel positive we'd be able to do the same for Trousdale. Open enrollment, so that's that. So the benefit guides, the SBC, all-inclusive enrollment forms, benefit administration system, it's all there, okay? We'll also, for the administration of carrier invoices to the payroll deductions. As I said earlier in the presentation, we do all those reconciliations every Monday for the groups. Next page. If you decided that you wanted to do a paper enrollment, Vicki said, hey, Tim, and the mayor said, this year we're going to, first year we just want it to be a paper enrollment. It's just a single piece of paper for all the products that would be offered and enrolled at the county and to the employees. There's just a little sample, that next page down there. Let me go back up to the top here. On that form on the back, there's a little clause there that when the employee signs an initial and a date, that they're adhering to the Title VI things for the year that they're going to have to be compliant with. So we'll grab that Title VI signature so that we're compliant, make sure that we get our grant money on Title VI. Next is a colored benefit guide. So all the things, if we were still on the state plan, if you'll go to that second page there on your left on the second page there, you'll see that's how you enroll in SGI Connect. Then over on the right side, there is all of your all's medical plans for the state. So we'd have your deductions in there and everything. Talk to the employees about that. Help them make a decision so that they go to Edison, they can enroll in the correct plan. There's your medical enrollment and Edison instructions form right there. There's your information if we have a health savings account and they want to contribute to it. That is all the guidelines and the if, ands, and buts on a health savings account. The others, as you go through here, we're just going to put an all-inclusive benefit guide, and it's got all of your products there. I won't bore you with that. Just going through it. And then at the back, we get into all of your state and federal notices that you have to give to your employees. We include that in your guide, so you have all that information right there. If you go to the next piece, it'll say Trousdale County. It's this piece right here. This is our financial dashboard. We built this in our office. And this is what we provide to all of our relationships that we handle the medical for. As long as you're on the state plan, we would not provide this for you. So if you come off the state plan and you have 100 plus on the plan, then we're going to be able to get claims data to be able to provide this report for you. And what I say about like about this here, insurance salesmen were notorious to holding the renewal till the last minute and coming in and saying, hey, it's a 17% increase is the best we could do. Well, we like to bring our clients out of the dark, quit treating them like a mushroom, and give them the data on a monthly basis that if their renewal was this month, this is what your renewal would be. So if you come through and you just walk through it, we're tracking everything, looking back 3 years, and then also looking at how things are rolling on a monthly basis, going towards our effective date and the renewal from the carrier. So what happens here is that a carrier will come and say, the renewal is 17%, but our analytics are saying, no, it's 2%. It's 2% with large claims in it. It's -2 without the large claims in it. We were able to get that carrier down to a 0 rate hold. That's how we're able to do it, to be able to continue to bring those renewals in at a much lesser renewal than what the carrier is wanting. But we'll look at through the years of how the group is ran. And we break it down by my medical premium and pharmacy premium and pharmacy claims. If you go on over to flip over to where we look at the rolling 12-month medical cost summary there, the insurance carriers want you to be at an 80% medical loss ratio. So the one that's got the graph there that looks like a EKG, that's what that is right there. That lets us know, that's just a quick picture to let us know how the group is running. We want to be at 80% or less. You go to the next piece. We're looking at your claims, how they're running on a monthly basis, what the medical premiums are, what the pharmacy premiums are. And then if you'll look there, you'll be able to see what the medical loss ratio is. So in this group right here, in this sample here, 4/1/2021 through 8/31/2021, this group is running at 98%. So we've got an opportunity to get this down to 80%. But if you look there, how it's running through the years, year over year, okay, and we start looking at trends historically, if you look at from 4/1/2020 through 8/31/2020, looking at a snapshot the year before, it was running at 87, 94. So they're running about like that. They're going to run somewhere between 84 and 92, 93 on an annual basis. Then we break it down by plans. If we've got more than one plan in here, seeing where we're getting all the claims at. And that's just more of the other. And then it'll turn around as you go through and you go to the pie chart. We're breaking it down by claims, and we're breaking it down by the segment of claims. Claims 25,000 and above to 50,000, then 50,000 to 74, 75 to 99, and then 100,000. We also look at the pulling point, because anything above the pulling point goes to the reinsurer, and it doesn't really have anything to do with the group. And I can explain that if you want me to, but at another time if you want. Then we turn around and we break down those claims. Those 7 claims there that's in the 25,000 to 49,000, we turn around and look at those claims right there in detail. Are those claims going to be ongoing, or are they going to be going away? If we see something there, if we see a drug or we see a claimant there that's an MS or something like that, we know that that claim is going to be there as long as that employer spouse is on our plan. So when we go to market at renewal time, those claims that are not ongoing, it's like a total hip or a total knee, it's a one-time and done. Then the carrier looking at it, trying to earn your business, if we're off the state plan, then they're not going to hold that against you. And that's how we get those numbers down. Then we'll turn around and look at the RX utilization on the next page, your top 10 drugs. Seeing how we're looking on generics and brand and preferred. Yes, sir. Remember when I said when I first started talking, if you've got 100 employees, okay, and if you're off the state plan, let's say that you moved from the state plan and now you are with Blue Cross Blue Shield or Cigna or Aetna or somebody like that. If you have 100 employees or more on the plan, the carrier will give you that claims data. So we take that claims data, put it into our software, and we run this report for you. We get that on a monthly basis.
So we have this data, or we gave you the data, or we gave you permission to get the data.
By us being your...
I'm a little confused on how, from our carriers now, do you put this together to get this data?
Okay, this is a sample here. This is not you.
Okay, so this is not
This is not you. This is a sample.
okay.
This is a sample. So if I was... Do what?
That makes sense.
Okay. But if I was your broker and I was...
If you were, this is what it would look like.
This is exactly, yes, sir. So you'd know that on a monthly basis. Okay. And so, and if you look at it, then we go ahead on that very last page there, we turn around and we give a renewal out to the renewal date of what the renewal will be at renewal. In this instance here, in this sample here, it's saying it would be 44%, but you got to remember, this is only 4 or 5 months into the plan year, but you know how it's trending, how it's working on a monthly basis. You know how on the state plan, we don't know what the state's going to charge us. We wait. We hope they give us the number before we pass our budget, but then they'll say it's 3% or 5% or whatever the case may be. Well, us, Sequoia Group, as your broker, then you would know where you were standing on a monthly basis. Anything else? Questions, comments, concerns?
Yeah, I've got several questions. Where are y'all located? Where are you?
We've got an office in Knoxville. We've got an office in Hendersonville. And then we've also getting ready to open an office in Columbia.
Okay. Are you a Tennessee corporation?
We are a Tennessee S corporation, incorporated in 2005. I was born and raised in Knoxville, Tennessee. My brother was a 41-year educator.
How many counties or municipalities, small, say roughly our size, are you representing now or involved with, roughly?
On your size, we represent about 6.
Okay, can you tell us who they are or not? roughly, or some of them?
I can, but not after this.
Okay,
Okay.
okay.
And sir, we can provide you multiple references.
No,
Okay. And on
I'm
that.
sure you wouldn't be here if you didn't have
Yeah.
it. Okay. Is this product portable if someone leaves our employment? There's any portability to this for a length of time or not?
Talking about on the medical, or you're talking about on all the products that we offer?
Yeah, primarily medical. But
Okay, well, the medical would just fall in lines of what the federal and state laws
they
are.
go into COBRA.
They go to COBRA. Yes, sir. But over on those voluntary benefits that we offer, all the products that we offer, it's an issue age. Once you buy it, it never increases. It's 100% portable. The product will be there till age 100 and no reduction of benefits.
Is there any percentage of participation required or at all? I know it affects the cost and things, but just wondering if there was a level that you have to be at before you say this is not working for us, bye-bye.
Well, when you come out of the state, that first year is the tough one, okay? Because what you're doing is you're gathering all the claims data from the state, okay? And then you turn around and you've got to go out and get quotes from all the different carriers on the claims and on the demographics that you have, the census, okay? And it will be based on your census and your claims data is what it will be.
You said that you represented roughly 15 to 20 companies that you deal with routinely. Can you name some of those companies or the bigger ones that are your primary carriers?
Okay, there's going to be Hartford, Lincoln Financial, Allstate, Cigna, Blue Cross Blue Shield, the Standard, Aetna, you name them, they're out there. Humana's there. Well, for all the five, what you get into with the medical piece, okay, and Tim will attest to this. Depending on where you are in the state, carriers are going to be very strong or they're going to be non-existent. Okay, so you're going to have your Blue Cross Blue Shields, you're going to have your Aetnas and Cignas and UHC and Humana. You know, there's some parts of the state that some of the carriers don't have a provider network. Okay, so we'll get a decline to quote on that. But all of the insurance carriers are out there. We send a bid out to them, and not only the five that I just mentioned. There's multiple carriers that have come into the state for self-funded, level funding, and other types of medical benefits that they're offering.
Questions or comments? All right, thank you.
Thank you very much. Thank you.
Mr. Chairman, this group will be Benefits Blueprint, and I'm not sure if it's going to be Tim Hearn, I believe, is going to be the one speaking. This is, like I said, this is a gentleman from Benefits Blueprint. Just hit this little center button down here at the very bottom of that, and they'll turn your microphone on, Mr. Hilton.
Am I on? All right. Yes, thank you guys for allowing us to do this. We appreciate it. We take this very serious. My name is Tim Herndon, and my company's Benefits Blueprint Partners. Want to introduce my son, Caleb. He also works for the company, and my wife works for the company. We're literally a family operation. But some of you probably know me because I gave a presentation a few years ago. And so you look familiar. You two gentlemen look familiar. I can't see your name tags, but y'all look familiar. Of course, Vicky, I've been pestering her now for what, Vicky, like 3 years, something like that, 3 or 4 years. Well, you guys allowed us to do a proposal in the past, and we appreciated it very much. We came up with some numbers, and the numbers were good, but the timing was right. The chairman was at that meeting as well. And, Mayor, I think you missed that. I think you missed that meeting.
Yeah, I believe it got scheduled while I was on vacation.
Yeah. So, but anyway, we appreciated it and giving us that chance, and we're still doing our thing. We are still doing our thing. And the thing that we do, and the thing that we've been able to do that's worked out very well for some, is we feel like we've come up with a solution for groups that are in the state plan for their major medical. Now, the state major medical plan is good. Okay, it's very good. And it is a good plan for most, but it's not the best plan for all. And when appropriate, when I say when appropriate, I mean when the math works. It's all about math, really, when you get down to it. When it's appropriate, we have taken groups out of the state plan, and we've been very successful in doing that. Now, one of the things that you deal with is that you have to, if you come out of the state for major medical, you have to stay out for 2 years, right? So here's kind of our motto, if you will. If that first year, the savings is not significant enough, then we won't recommend it. Okay, you got to have a pretty significant savings in that first year because, Vicki, how long do you have to stay out? You have to stay out 2 years, right? So you have to stay out 2 years. So that first year has got to be significant. Now, what if you had to go back in? Well, I mean, that's not like a disaster. Of the groups that we've taken out of the state plan, we've actually put one back in. They were out for 3 years. They saved, it was a really big county. They saved $500,000 over 3 years. The employees had a lower premium. The employees had a better plan. And this is interesting. Now, we had no way of knowing this would happen, okay? And I wish I could take credit for it, but I really can't. The state has different premium levels. And your premium level is based on your demographics. When they went out, when they came out of the state, they were at a level 3. So they were paying a really high premium. But after they were out of the state and we had them in a private plan for 3 years, when they went back in, they were at a level 1. So they considered the whole experience very positive. So anyway, that's the point. But here's the thing, we make sure that first year savings is significant enough or we won't recommend it. We do not want to be a part of recommending something that's, not going to be enough. Most of the time though, it is. Most of the time, my understanding is the purpose of this meeting is to allow us to put a proposal together. And then, correct? That's the idea. Allow us to put a proposal together, right, Mayor?
Well, it's to have you do a presentation so the committee kind of knows what we're talking about when we talk about broker services. And then I would like for them to vote to issue a request for qualifications to the brokers, and then you come to a selection committee.
Okay.
With your
Okay.
qualifications.
All right. So now we did a proposal a few years ago. Our math was good. I think we had a savings of about 10%. Now, if you'll notice, I'm going to spend my time talking about the major medical. And the reason I am is because it's kind of the tail that wags the dog, if you will. Dental plans are very similar in rates and benefits. Vision plans, very similar. Okay, the state, there's nothing really special, if you will, about the state's dental plan, vision plan, or any of the other ancillary, what we call ancillary plans. The product that's the most important is the major medical, and that's what we focus on. We can provide, it's a given. You need to trust me, it's a given that dental, vision, life, disability, all the other ancillaries, we will provide as good or better plan than the state would have. But it's the major medical that really drives this decision, because it's, other than your compensation, it's probably the second most important or the second largest expense that you have. And the other thing is the employees that work for the metropolitan government, Trousdale County, they probably consider that the reason, maybe even the main reason they work for the county. So it's got to be good. It can't be bad. It's got to be good. I want to take a little side note real quick. I don't know if I read this or if I heard it on the radio, but they're always talking about the growth of various communities. Davidson County, they're always talking about Davidson County, how fast it grows, Rutherford County, Williamson County. I read something the other day that said that Trousdale County was the fastest growing county. In the context of that I read, is that right? I mean, have you all, I'm sure you all know that.
It is correct, but you had 2,000, probably between 2,100 to 2,500 of that growth is in the prison population. They count on our census numbers, but even if you take them out, we went from about 7,800 people to around 9,000. So we did still have a pretty good amount of growth.
Yeah. Well, my son lives in Thompson Station, and I believe that I live in Wilson County. I believe that it's inevitable. This county over the next 20 years is going to boom because you're just close enough to Davidson County. You can pop on the interstate and head down it. So I mean, I think your property values, your tax revenues, if you will, and your population is going to really grow over the next 20 years, say. So anyway, I'm sorry, as a side note, I'd read that, and I was because you never hear about any rural counties. You always hear about the more urban counties. But all right, so back to what I was talking about. The medical plan is the most important plan. Okay, now the state plan is good for most, but it's not the best for all. What we've been able to do, when appropriate, is take groups out of the state plan. And we've got groups that have been out of the state plan for 9 years. Like I said, we've only had to put one back in, and it's really, really worked out well for the groups that we've taken out. I believe, Vicki, you've spoke to some of those groups in the past. All right, so one of the groups we just took out of the state, I'm giving my competition a heads up of one of my customers, but I can't help it. But one of the groups we just recently took out was the city of Lafayette. They're coming out of the state plan effective 1/1. All right. And I've got their proposal. I want to mention this first. The plan, now, some of you, if you were in the proposal I gave a couple of years ago, you remember we mirror the state plan. You with me? Same deductibles, same copays, same co-insurance. Everything is exactly the same except for one, and I'll get to that. In fact, we use the same terms. Which we can call our plan whatever we want. It's a private plan. We call our plan the limited, the HDHP or CDHP. I forget what they call it. Is it HDHP or CDHP? Thanks, Caleb. The CDHP, the premier, and the standard. So when we talk to the employees, because your employees are good. There's going to be some unnerving, obviously, when you talk about changing. You're going to get from a political standpoint, you're going to get some anxious, employees. They're going to come to you and say, "Why are you changing our insurance?" We know that, right? You know that. I'm sure you do. So you're going to have to calm them. You're going to have to give them some I get not pushback, but some feedback. We call it, the plans are the same. We mirror the state plan. Same deductibles, copays, co-insurance. We call our plans the same names. Okay. Employees will not be harmed. I will put my liability and my E&O liability insurance that employees are not going to be harmed. Okay. They're not going to be harmed. They're going to be helped. Because here's the biggie. Here's really besides the premium savings, which should be there. Here's the big thing. Vicki, what do most of the people have? What plan do most of your employees have? The limited. What is the maximum out of pocket for a calendar year if you have the limited? $6,800. Good. You didn't know I was going to put you on the spot there, did you? $6,800. So here's the deal. If you have, heart issue, a heart event, if you have a hip replacement, knee replacement, if you have to have, rotator cuff surgery on your shoulder, whatever you have to have, if you go in the hospital, you're going to be negotiating with the doctor and with the hospital to pay $6,800. And I'm going to say out of your 100 employees, you got 70 something in the limited, something like that, Vicki, is that? Here, I can probably tell you. So most of your employees that work for this county have got an out-of-pocket maximum. Okay, so 74, let's see, 77, 87. 87 of your employees have an out-of-pocket max of $6,800. That's a lot of money. Again, it's one of the lower, it's the third lowest price plan for the state. So that's why a lot of your folks have it. Nothing wrong with that. And it's pretty typical in the marketplace, but that's a lot of money. That's a lot of money for somebody to come up with. And if you go in the hospital overnight, that's what you're looking at. It doesn't matter what your deductible is. It doesn't matter what, that's what you're looking at. How much am I going to have to pay? All right. Our plan mirrors the state plan, same deductible, same copay, same coinsurance, except our out-of-pocket max is not $6,800. Our out-of-pocket max is $3,456. We cut that out-of-pocket max in half. Now, again, if you're a young employee and you don't ever go to the doctor and you don't have a lot, that's no big deal, right? All you care about is my premiums lower. But if you're a person that uses a lot of medications, or if you have a health concern, or if you get cancer, or you have some type of chronic disease, that is the most important number. That's the most important number in your health insurance. What is my out-of-pocket max? We cut it in half. Okay, we cut it in half. Your employees, they don't know it yet, but if they have this plan and they're out of pocket, they're going to be very happy. They're going to be thrilled that their out-of-pocket's cut in half. Again, they don't know it yet, but if they have to, they will. All right. Now, but again, you're commissioners. You vote on budgets. You got to be fiscally responsible. And that sounds great, Tim. You cut the out-of-pocket max in half. That's great. What about the premium? City of Lafayette. We just took them out of the state plan. This is their proposal. The first year, the guaranteed savings. Remember, I said it's all about the guarantee. If that guaranteed savings number is not large enough, then you should not do it. You should stay in the state, and we will tell you that. That number, that guaranteed savings number for the city of Lafayette, and they've got 76 employees. They got a few fewer than you guys, but that guaranteed number is $93,509 guaranteed. That's almost 13%. It's 12% and change. So the way they do their plan, they have most of their employees that are in the premier plan. They contribute a little more toward the premium. That's just what they do. And so we cut the out-of-pocket max in half, and the commissioners that voted to go with this plan was able to save in that line item on the budget 12%, $93,000, guaranteed the first year. Now you may say, well, what about year two, right? What about the second year? Who knows? I wish I could tell you that I knew, but only God knows what the second year will be. There's no way to know. I mean, you don't know what the state's going to be either. There's no way to know, but here's what I do know. Our renewals have been lower. Our trend has been better than the carriers that we represent, the way we design the plan. We've been able to, we always, every year that we renew a group that's out of the state, we look at the state. We look at them every year. Other than the one group, we've always been below the state. And of course, the benefits are better because of the out-of-pocket max. So it's really worked out great. But I mean, even if in year two, the private plan, if you come out of the state, I like to hope for the best, but plan for the worst, right? Even if you come out of the state and it goes up 10%, which we've never had anybody do that in the second year. Even if that did happen, you're still ahead. Because if it goes up 10%, you're still below what the state was, because the state's going to go up too. So my point is, or my thing is, we have the ancillary plans. We have those. We have the HR services. We provide all those for our customers at no charge. We have all the bells and the whistles and all the items that will help Vicki and help the mayor and help your employees. We provide customer service that's second to none. I mean, I will put our employee customer service against anybody's. Not to say that they're not good. I'm just saying ours is as good. But the thing that I believe we can do, if you all give us a chance, I believe we can save on your medical insurance premium, and it can be a big number. 10% of, well, the last time we did a proposal, I still have that. Whoops. Still have the book from last time. You all were paying your budget. Now this is all in. This includes the part the employees pay and your part. The all-in amount was $836,352. So it may be a little bit more than that. Does that sound? Who knows, right? Our savings was $82,000. So it was, this was about a year ago. It was just under 10%. And listen, guys, that's guaranteed. It'll never be below that. Now it could be a lot better, and it probably will be, but we don't talk about what it could be. We talk about the worst case scenario. So we'd love to have that chance. We just need a few data items to put those proposals together. You're free to talk and speak to any of our customers about the service we provide. Caleb is kind of the brains of our operation. Caleb, do you have anything you want to add that I may have not mentioned? Now, I just said you were the brain, so you got to say something.
As far as the HR side of it.
Caleb, if you could, this is being streamed over the internet, and if you don't at the microphone, they can't hear you.
As far as the HR side of it goes, I think we actually use the same human resources department as Tim, but we utilize a program that offers an array of items. But the main thing that I think would benefit the county here, the city, or the municipal government here is the human resources hotline. So if you have, and especially with COVID, any instance where you may have an issue or have a question of what to do in a certain situation, I'm sure Vicki has stuff come up all the time of how do I navigate this? We have a resource that you can go to and turn, and you have lawyers and you have human resources professionals on staff to provide not only the answer to whatever the question is, but you also have the ability to get a paper trail of if there's any blowback, you've got the law and regulation and act to give you as a backup if there is ever any blowback. The other thing of it is as y'all continue to work with OSHA and work and get audited from that standpoint, we offer online courses that are OSHA certified so that you can break it out by department. And as you look to create a course list to qualify for the OSHA, it satisfies that requirement. We've had groups that have been audited actually this past year that OSHA's come in and said, hey, show us where you have these certificates to show that you've trained your employees in X, Y, and Z, and we pull those certificates and satisfy that requirement. So those are the two biggest things on top of some reporting features and enrollment and stuff like that.
So thank you guys for your time. Appreciate it. We'd love to have a chance to work with you. Questions?
What carriers, what companies typically are y'all involved with?
Well, there's basically, when it comes to major medical, okay, there's essentially 5. That's it. Blue Cross, Humana, Aetna, Cigna, and United Healthcare. And then there's some other plans. There's some TPA type arrangements. Trustmark is one that we've got some groups with. We utilize a company called Lucent Health as a TPA, but so it's not like there's this big universe out there. You know, it's a fairly limited universe. Now, when it comes to the other plans, the life, the disability, the dental, there's a bunch more of those. And we're licensed and contracted with all of them. I mean, you have to be. So did I answer your question?
One other thing, well, actually a couple of things. A lot of times different companies, certain physicians do not take insurance from that provider.
Yeah.
I know that that is a problem sometimes. The other thing that tends to be a problem, particularly with employees, is where you're requiring them to be in a what's the term for it, PPO or group, where you have to go get your well physical, and if you're too fat, we're going to charge your premium more, and all these type of things. That is the savings typically because you're requiring people to go into that type of thing.
No, sir. We actually, believe it or not, because our first group that we took out of the state was about 9 years ago. All right. So that's 9 renewals. We've renewed them 9 times. The state used to have that requirement where in order to get their best deal, you had to height, weight, fill out a form, all that. Right. Well, the state went away from that. But it's funny, the group that one of the groups that we took out of the state, they liked that feature so much that we kept it. But you don't have to do that. No, we don't do that. We don't do that anymore unless the group wants it. I mean, like I said, that particular group, they wanted it. And so we can keep it in there because we used the private carrier we use for that group is Blue Cross, and they have that capability of having a health assessment and such as that.
On the prescription plans, I know there's a big difference in their pharmacology as to what tier drug a particular drug is or isn't. Will the employees have any choices in that, or is it what you go with is what they're going to go with? Because typically, of course, I'm on Medicare now, but I go to my pharmacist and I say, these are the drugs I take. What company should I be in? For
your drug benefit, right, your Medicare drug benefit.
And they look at it, and I know that sometimes there's big differences in co-pays. There's big differences in what tier a particular drug.
Is that me? Am I doing that?
I got it. Go ahead.
I'm sorry.
Sometimes it feeds back. But that was just, and I know we don't have a lot of choice with that with the state plan either. I just wondered if that was something that had been any kind of an obstacle in trying to sign people up for it, or when you're changing over.
That's a great question. So without getting into the weeds, if you will, the way we design our plan, we have a private carrier, and that private, just an off-the-shelf private carrier that'll have a high deductible. And that plan, let's just say it's Blue Cross P Network. Well, let's say Blue Cross S, because I believe most of the employees here are in S. All right. That is the network that we use. So what that means is if the drug, whatever Blue Cross says that what the tier that drug is in, that's what it's in, right? But here's the difference. A lot of the drugs are paid not, unless it's real expensive drugs, the way our plan design works, most of the drugs are not paid by the carrier. They're paid by the TPA that we utilize. So here's the deal. Let's say that the state had a drug that was a tier 2, and the employee was used to paying $30 copay, right? But Blue Cross, if you follow their network rules, that drug would be, say, a $60 copay. All right. Well, guess what's going to happen? What's going to happen the first time that employee goes to the doctor? Well, or they're going to call Vicky and say, "Hey, this insurance ain't no good. You know, why did you put us in this plan?" All right. Here's what we can do. If that is a significant enough issue, we actually have the way we can, because most of the drugs are not paid by the care. We have a way of overriding. You with me? We can actually override Blue Cross, and we can make that drug a $30 copay. Now, we don't want to do that all the time, but I'm just saying if it's a specific instance, we have the ability to do that. But we probably wouldn't do it for just one person, right? But if there was a lot of people, you know, if it was affecting a lot of employees, and now here's the other thing that's going to happen. You're going to have employees that have been paying 60 with the state, and with our plan, they're going to pay 30. You think you're going to hear from them? Probably. No, they're going to pay their 30 and get out of there as fast as they can before the pharmacy changes their mind. So you're not going to hear about where the drug benefit is better than the state, but you will hear if it's worse. And again, we don't want to just wholesale make all but we do have the ability to make some slight changes with the I was about to say governor, with the mayor's, you know, in the council's oversight. Does that make sense?
I mean, the thing, I guess, my biggest concern is, say we go with you guys, and all of a sudden, the 3 doctors that we have in our county are not on the list of approved doctors, and you can't go to them unless you're paying half of whatever they're charging you or something. That has been a problem, even with the state plan. Same thing with drugstores. I can probably save money by doing 90-day supply of drugs through Rite Aid or Walgreens, but I want to use a local pharmacy because when I run out and that prescription's up, they're going to give me some pills until they can contact the doctor and get a new prescription, where the others are not going to do that.
Right.
And it's all of those things that have to weigh into this decision. And it's all of those things that helps us to know, to be able to sell it to the employees, I guess. Absolutely. So a lot of my questions are not so much making a decision on what to do, but I'm asking questions to be able to explain this better.
Right. Great question. So we're going to go out and get quotes from all the carriers. All right. More than likely, we're going to land on Blue Cross. I mean, I don't have any prejudice. I don't have any, preference for them. It's just, they tend to be the best partner in this area, in the plans that we do. So the state pays Blue Cross a fee to use their network. What do you think, Vicki? I think all but just a handful are in the S, correct? So all of your employees are already in the Blue Cross S. We're going to use it. So we're going to use the same network. So there will be absolutely no difference. None. So there will be no difference. Now, we are also going to offer an expanded network plan, because you do have, the state offers 3 networks. They have Blue Cross S, which most of your folks are in. They have a skinny Cigna network it's a real narrow network. And then they have a big wide open Cigna network. So we'll always offer 2 options, the S, and then we'll have an expanded option where they can go to anybody they want. Those are great questions. And, we don't just, if you all decide to do this with us, that's when our work begins. I mean, we're going to be talking to your employees on a regular basis. We're going to be helping them navigate this. We don't go anywhere. I mean, we hold their hand through the whole thing, because you have a good point. it's, you've got these drugs that you're taking. Obviously you don't feel good. You've got financial stress. You don't need to be dealing with all this insurance stuff. So we have a customer service department that will hold the hand of the employee and help them navigate all that. I promise. I guess I've gone long. I apologize.
We do have another meeting scheduled, but I appreciate y'all.
Thank you.
Coming, great information. Mayor, is anything from a committee we need to do from your standpoint here tonight?
Well, I'd like for the committee to vote to, I guess, authorize or support me issuing a request for qualifications to be sent out to different brokerage firms to get qualifications back, and then we'll look through that. I guess it'd go, we do have a professional services selection committee that we normally use for that, particularly if it's for involving grants. You can use that committee if you want to pick the brokerage firm, or if you want to, it consists of myself, the county commission chairman, then we have one appointee that we can pick amongst ourselves. We don't have to have it from somebody else. So we could pick a member of the committee here to serve on that as well, to go through and pick which brokerage firm we were going to use.
Did y'all, the committee won't make it motion for that?
Are there any other brokerage firms in the area that might be interested in coming and seeing us in the near future? So we might, I mean, we've seen two. I'd be willing to put off a month and see if there's any others willing to come and talk to us before we move in that direction.
Well, the only three that have contacted me are the ones that were invited here tonight, and that was 5 Points, Benefits Blueprint, and Sequoia. Those are the ones I know. Now, outside of that, again, I don't know. These are the ones that have contacted me or I've met through various organizations we're a part of.
I only asked that thinking, I know our school system uses American Fidelity. Didn't know if that was a brokerage firm that might be in the same.
We use American Fidelity for the ancillary benefits, but my understanding is they don't do the health insurance part of it. They don't do what we're talking about here tonight. They do. We do currently use them for life insurance benefits, disability, cancer coverage, and those kind of things.
I think, I guess maybe we know what we have with the state, but I almost feel like we need a representative from the state insurance pool to come in and tell us why we shouldn't jump ship from them. Maybe that's not a valid point, but in my mind, it's a valid point. Is there a reason that we wouldn't want to do that?
Well, the reason I'd like to have a brokerage firm is because they should come in, analyze it. 2 years ago, 5 Points did look at it just initially and told us they thought we were better off on the state plan. I think they told that to the insurance committee a couple of years ago. The brokerage firm should analyze all that and give us which plan is the best. If I think Mr. Helton mentioned it earlier, if they feel we're better, and Mr. Hernan has too, if they feel we're better off staying on the state plan, that would be the recommendation, to stay on the state plan. But they would compare the state plan to what they can get through other companies and make a recommendation of which direction we should go. And they also offer all these human resources assistance and all that stuff that the state does not.
I really think the professional selections committee is the obvious route with this, and my suggestion for the third person would be chairman of this committee, Mr. Gregory, if he can work it into his schedule to be able to do that. Just my thinking on it. And if for some reason you couldn't or didn't think that would work, Vicki works with it more than anybody. I think she would be the next logical person to go on to that. But we can talk about that, think about that. Or we can just let this committee decide it and then not go to professional selections.
Any more discussion on this?
If I may speak, is it Landon? Lyndon brought up a very good point here. What's happened in the past, usually what the county will do, they will put out an RFP for a broker of services. And they can put that out in the paper, they can put it out into vendor registry, okay? At that point, you may get 10 or 15 different brokers like Mr. Herndon and myself that would want to quote on that opportunity to be your broker, okay? So there are more people out there than 5 Points, Tim's company and then my company. There's a lot of folks out here. Tim has his niche, I have my niche, and so does 5 Points. So if you want more than 3 or 2 here, just between Benefits Blueprint and Sequoia Group, you can put that out to bid from an RFQ or an RFP for broker of services. And then at that point, what they do is that you would select 2 or 3 to come back and present to you. That's how it's been done in a lot of the counties that have to go out for bid. That's just an FYI. And that broker you pick, he or she should be able to tell you with all the analytics and data, should you stay in the state plan or should you move out? Okay. And that, I mean, that's what you're hiring that person for, whether it's my firm, Tim's firm, or whomever.
I would say when we do put it in past, and we do it with requests for proposals or qualifications, they are put. In the past, we've done it in the local newspaper, though I have had some of the larger firms suggest we put it either in the Lebanon Democrat or over in Gallatin, because they said they actually have programs that'll do searches and it'll pick up those newspapers before it picks up the Vidette. And we do now have vendor registry as well. We added that within the last month, so we can go through that portal as well and put that out there. So there is access to many more than the ones we've got here.
I myself would like to see that option put in front of us, that we see some more pieces, take some more opportunities. I've talked to quite a few members in the county that work for our county, especially in our sheriff's department, that would really like for us to just see if there's any options for them. That's one thing they really want to know, if there's something out there. I think it's worth our time for our employees to take that time to put out an RFQ. I think it's our RFP, I think is this case, right? Request for proposals.
No, it's gonna be a request for qualifications, and the form I'm gonna use, I actually got from the city of Spring Hill, did this 2 years ago.
I'd put that in the form of a motion that we put that out to see if we can get some other firms that we might look through here. We can bring those firms back, whoever puts in, then we can decide on 3 or 4 that would come and present to us in another meeting.
I've got a motion. I'll have a second. Second by Mr. Jewell. Any more discussion on it? All in favor, say aye. All opposed, say no. Motion carries.
Just for clarification, you want it brought back to this committee, right? Not professional services, am I correct? Okay, I was writing down the notes and I want to make sure I had it correct.
Is any other discussion tonight on this? Like I say, I'll thank y'all for coming, Mr. Burton. Well, I was going to ask for public comment, but I think most remember. Any public comment on it for the insurance committee? All right, I entertain a motion to adjourn by Mr. Burton. I have a second by Mr. Gully. All in favor, say aye. Thank y'all for coming.